Hello everyone. So the company I'm going to speak to you all today about is E2E Networks. Now the reason why I chose this company is because of its amazing growth story over the past 1 year's time. Now what is E2E Networks, you may ask, right? So E2E Networks is the leading hyperscale from India with a focus on advanced cloud GPU infrastructure listed on the National Stock Exchange. So the company is popular for providing accelerated cloud computing solutions, including cutting-edge cloud GPUs, including NVIDIA A100, H100, and the newly available H200 GPUs on the cloud. So it's a cloud-based internet service, right? So let's just look a little bit into it right now, right? So it has 15,000 plus clients, operates in 10 countries, has 3 data centers, and of course you can have a look at some of the clients over here: Cardeco, IIT Madras, Fluid Stack, ISB, Spine, Auto, Sherpa. So these are all big clients they have, right? So now my purpose is not to give you all an overall overview about its entire business. So you all can actually look up to it on the E2E Networks website. My main purpose of this video is to share with you all the fundamentals of the company and why the price of the stock actually did go up. So let's just have a look at the fundamentals of the company right now, shall we? Now, what do we understand through this? So it's a 7,261 crore market cap company. So what does that make it? That's a small cap company. It's nothing more than a small cap company. The current price, have a look at that, 4,300 rupees. It's huge, right? The high was, again, 5,488 rupees. And what was the low? The low was just 607 rupees. So how many times has it gone up? 9 times, right? Now, what is the stock PE? It's 231. That's too high. Now, when you compare it to the industry PE of just 42, it's too high. It's almost 6 times more than the industry PE, right? So it's trading at a very high valuation at the moment, right? Book value 289, which is good. ROCE 25, ROE 36.4, both excellent, both really excellent. Promoter holding at 51.6%, which is okay. Profit growth of about 80%, which is again good. PEG ratio of 3.3. It's a little bit on the higher side, meaning the company is a little bit overvalued at the moment. Net profit margin last year was 23.2%, which is again good. Debt of 181 crores, which is not very high. Reserves of 481 crores, which is good. So they got a lot more reserves when compared to the debt, which is a big plus point. Free cash flow of minus 103 crores, that's not very good. That's not a very good sign. And the EPS, the earnings per share, what is it? That's very healthy. That's at 20.5, right? So that's a really, really healthy EPS. So let's just have a look at the price history of this stock. Guys, I urge all of you all to look at the price history of every single stock that you all research about. Never ever buy any stock without really understanding or having a look at the price history. All right. So this started way back in the year 2018 at 76 rupees. And as you can see, it's a flat line. So it remained around that 50, 60, 70 rupee mark. It did come down all the way up to 14 rupees. Right? When was this exactly? It was in 2019. It remained like that for many years, right? So all the way till 2021, around this period, it hovered around that area, so around 74 rupees. Now from 2021 till 2023, that's how many years? 2 years, it did increase, right? All the way up to 168 rupees, which looked like a big increase, right? Pretty big increase. But honestly speaking, that was not the real increase. Now just look at the line from here. From July of 2023 all the way till November of 2024. So that's how long? 1 year and 4 months. From 168 rupees, it went all the way up to 5,000. The actual price is 5,488, as we already saw. And now it's come down. You know, the markets are correcting, and it's obviously correcting along with the markets. Now it's 4,300 rupees right now. Now let's just have a look at the profit and loss statement. That's something that we need to look into. That will definitely explain how this price pattern shifted in its favor, right? So let's just have a look at that. So let's just have a look at the profit and loss. Now they're showing profit and loss statements from March of 2010 onwards. So what was it? Zero. 2011 they made a sale of just 1 crore rupees, by the way. And now if you have a look at it, 15, 16, 17, 18, 19, 20, all the way up to 24, and now 12 months trailing, from 1 crore to 142 crores. That's a huge difference, right? 142 times the growth, which is a huge growth, right? Now, what about the net profit? That's really important to see, right? So you can see in 2010, they were at loss, 2011 again lost, 2015. So 3 years, 12, 13, 14, they did not show the exact results. 15 onwards, 1 crore, 16, 2 crores, 17, 4 crores, 18, 6 crores, 19, 2 crores, going down, 20, minus 9, again going down, minus 1 and 21, 22. Onwards, they started making profit again, right? 6 crores, 10 crores, 22 crores, and now 12 months trailing, it's 31 crores. Now you can see there's a consistent growth, right? It's not a humongous growth, but it's a consistent growth. 6 crores to 10 crores, 10 crores to 22 crores, and 22 crores to 31 crores. And as you guys can see, the EPS was minus 10 in 2010, and it's grown all the way up to 20.45 in this year as of now, which largely explains why the price of the stock has gone up to a large degree, right? But if you actually look at the profits, you will be wondering how has this gone up so much, right? Now let's just have a look at some more details right now. Let's look at the promoter holding. It was 59.7% in March of 2022, and it has declined in December 2024 to 43.8%. So that is a decrease. Now what about the FII? No FII had invested in 2022, and 2024, 2.81%. Public, as of now, hold about 50% of the stake or the shares. 636 shareholders in 2022, and now 34,500. A huge number of increase, right? So as you guys can see, a lot of people have benefited from the big run it has had, right? So what do we understand through this right now? Is it a good time to invest in this company? Now I have a question to ask all of y'all. Would I advise y'all to buy it at 4,300 rupees? Honestly speaking, guys, just have a look at the PE. Stock PE, it's at 231. It's ridiculous. The valuation is absolutely ridiculous at the moment. This is an overvalued stock at the moment. It's really highly overvalued. I mean, industry PE is only 42. This is at 231. It's absolutely ridiculous to buy the stock at this price. It's an absolute no buyer at this time. Absolutely stay away from buying it at this time. If there's a major correction, or if, honestly speaking, if the profit goes up and it brings up the EPS and brings down the PE to say around that 70 to 80 mark, you know, for that, they'll have to make so much more profit. They'll have to make so much more profit than what they made right now, right? So this is not an ideal time to buy this company at all. Not at all an ideal time to buy the company. But said and done, this is a cloud-based company. And I want to inform you all one thing. They have a capex of 800 crores and they're going to roll this out over a period of the next few years. They're not really mentioned when exactly, but over the next few years, they have a capex of 800 crores. So that 31 crores. One big advantage with this company is it's grown in a very, very simultaneous manner. It's not grown in a very exponential way, which has actually helped the EPS to come up, right? So from 31 crores, in the next few years' time, if they're focused on their business and they keep making profit, there's a high possibility from 30 to 50 crores. They can go all the way up to 100 crores in net profit. And if they go consistently like that, that can scale up the EPS in a very big way. And once that goes up, it can bring down the PE ratio drastically, which would make it a much more better valuation at that time. Right now, 4,300 rupees is just too expensive. And this is not the right time to invest into this company. And as I said, if and when the valuation of this company comes down, as in the PE ratio does come down, the EPS does go up, and the price obviously comes down, then that would be a decent time to invest a small amount of shares in this company. Because said and done, guys, just looking at the price of the share, don't be under the impression it cannot go up beyond this. Because the company has only made net profits of up to 31 crores. And to be very frank with you guys, this company has got all the potential to go all the way up to 100 crores in the next few years' time, which can honestly scale up the price of this company by many more thousand rupees if it does happen. So, if you have a good amount of money to invest in this, invest a reasonable sum of money into it when the valuation is more attractive, and hold it for a good period of time, because this is a cloud-based company, it is a future-based company, and as I had said in my previous video about the previous company I was discussing about, Infibeam Avenues, IT stocks are going to be in the forefront for the next few years, and this company I believe is going to be a major player in the next few years to come, and it is a definite company to invest into once the valuations come down or turn out to be a lot more fairer than what they are right now, right? So that's it for me today, guys. Y'all take care and have a wonderful day ahead.